News when you want it with Bloomberg News Now. I'm Denise Pellegrini. Senate Republicans plan to start voting on their new version of that $4.2 trillion tax and spending package today, with compromises on issues like Medicaid cuts and state and local tax deductions included. President Trump says he wants this bill passed ASAP.
I will tell you this, if that bill doesn't pass, the country will get a 68% tax increase. So think of this.
President Trump has set a July 4th deadline for this bill to be passed. This Senate bill, in a tentative deal with House Republicans, increases state and local tax deductions. That would raise the so-called SALT deduction cap from $10,000 to $40,000 for 5 years before snapping back to $10,000. And Representative Mike Lawler, Republican from New York, among those behind the push for that. And he says the GOP-dominated Congress can meet President Trump's timeline.
Well, we're definitely all on standby. There's no question. The objective is to get a final agreement and get the bill voted on. I know the president and the White House want the bill to move. Obviously, the Senate needs to take up a bill and pass it. But I expect as soon as the Senate acts that we're going to be back in Washington, if not sooner. But I certainly expect that we will be back in D.C. next week.
Lawler there on Bloomberg's Balanced Power. To win over moderate Republicans, the bill would also create a new $25 billion rural hospital fund aimed at helping some Medicaid providers avoid cuts. A watch for more drama today because the Senate bill can be further altered on the Senate floor to secure the votes Republicans need to pass it. The measure aims to avert a U.S. payment default by raising the debt ceiling by $5 trillion. More trade tension, this time between the U.S. and Canada. President Trump says he'll terminate trade talks with Canada in response to a 3% digital services tax that would mainly hit U.S. tech companies. Bloomberg's Tyler Kendall at the White House explains why it's all so confusing for investors.
President Trump says that he's going to put into effect a rate in the next 7 days, and we're going to have to see what that actually ends up coming to fruition, what that would look like, because there's a lot of different factors when it does come into the negotiations with Canada, including those sector-specific tariffs. Our original understanding of the Section 232 tariffs was that they weren't going to be part of the broader tariff conversation, such as on autos or on steel, but perhaps that could play some sort of role here going forward, since we know that is something that Canada had been pushing on, but at the moment it seems like this White House is stopping all negotiations.
Bloomberg's Tyler Kendall reporting at the White House. The Canadian tax that triggered this White House reaction was passed more than a year ago. President Trump, meantime, hardening his threats to raise tariffs on certain other countries by his July 9 deadline. But Treasury Secretary Scott Bessent is focusing on the deals the U.S. already has with the U.K. And the White House has also reached an accommodation with China. And Bessent says the White House is aiming to ink 10 to 12 other important trade deals by Labor Day. Meantime, Japanese trade negotiator Ryosei Akazawa is extending his stay in the U.S. for further negotiations, according to NHK. Big day for U.S. stocks. The S&P and NASDAQ yesterday closing at a new record high, but Seema Shah, chief global strategist at Principal Asset Management, says watch for some volatility going forward in the short term.
Comparing it to January, you've seen economic growth downgrades. You've seen inflation forecasts being pushed up. You've got tariffs ultimately ending up at a higher level than when they started the year. So does it really make sense for equities to be hitting new record highs? I think that is a pain trade for the next 3 months. I think if you're looking out over a 12-month period, actually, I think that things can be a little bit more constructive. So if you're taking a long-term view, then certainly being risk on. But in the near term, I do think there's a couple of potholes, bit of volatility to come.
Shah is chief global strategist at Principal Asset Management. A group of 22 large U.S. banks has cleared the Federal Reserve's annual stress test, indicating they can withstand a severe recession. That sets the stage for increased buybacks and dividends for shareholders. The Fed's less rigorous test this year is expected to lead to lower capital requirements, allowing for those larger dividends and share buybacks. In the Middle East, President Trump says a ceasefire in Gaza could be close, perhaps next week. The president also says he considered easing sanctions on Iran after a ceasefire, but decided not not to after Iran's leader claimed victory in the war against Israel. President Trump also said the U.S. and Iran would talk next week, although Tehran denied discussions are scheduled to resume. PricewaterhouseCoopers planning layoffs in the UK, according to the Financial Times, and also lower salary increases amid a broader market slowdown, according to the report. The Justice Department has settled its lawsuit challenging Hewlett-Packard Enterprises' $13 billion takeover of Juniper Networks, less than 2 weeks before a trial was set to start. The settlement disclosed in court filings late yesterday and will require the combined company to sell HPE's Instant-On wireless networking business and auction off a license to Juniper's competing Mist business. The settlement must be approved by a court but would negate the need for a trial that was set to start July 9th in San Jose. Warren Buffett will donate about $6 billion of Berkshire Hathaway shares to 5 foundations. It's part of a pledge he made nearly 2 decades ago. The foundations include the Bill and Melinda Gates Foundation Trust, his children's foundations, and the Susan Thompson Buffett Foundation. Buffett's will provides that about 99.5% of his estate is destined for philanthropic usage. And Roger Federer has a lot of titles tied to his name after a 24-year playing career in tennis. Now he has a new title of billionaire. Bloomberg's Nancy Lyons reports.
The Bloomberg Billionaires Index now pegs Roger Federer's net worth at about $1.3 billion, putting him an elite company among athletes. Michael Jordan is worth $3.5 billion. Tiger Woods' wealth is about $1.36 billion. The Swiss tennis star won 20 Grand Slam events in his career, amassing more than $130 million in prize money. But the bulk of Federer's wealth has come from a series of sponsorship deals, including Credit Suisse Bank, Rolex, and a Swiss chocolate company. He also nabbed a deal with Swiss shoemaker On, with his stake now worth at least $500 million. I'm Nancy Lyons, Bloomberg Radio.
Thank you, Nancy. And that's news when you want it with Bloomberg News Now. I'm Denise Pellegrini. This is Bloomberg.